Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Friday's volatile session ended on a mixed note for the Australian dollar following a rebound around the 60-day moving average earlier in the week at 66.5, which is also where the simple 60-day simple moving average also is in line with. Meanwhile, the US dollar index slipped to 101.11 as traders now prepare for a crucial week of economic data ahead of speculations that the US Federal Reserve is likely to cut rates either 25 or 50 base points when they meet for their monetary policy meeting on September the 17th, 18th New York time. Also this week, all eyes will be on the unemployment report, which is expected to influence the Reserve Bank of Australia's monetary policy, with any surprises likely to add volatility to the Australian dollar. So therefore, keep an eye on the top side as the market has clearly stated a slightly bullish bias that could extend on to 67.65 to 68 cents. With any weakness, views support around 66.90 with a base still holding around 66.5. So with the dollar index slipping further to 101.11, the euro has rebounded, and from the Marubozu candle is a little bit mixed for the start of this week, but nevertheless the bounce from 110, 20, 30 should look on towards 112 as a target and reassess from there. Turning to dollar yen, the market closed under 141.60 and now puts further threat to the downside. That could see a move towards the region of 138 to 136 as a potential target seen from the weekly time frame. Given how heavy the technicals are, and also the fact is this divergence has nearly been negated from the weekly bias, the downside is likely to continue, but it will be a bit of a bumpy ride, but any rebound should find resistance around 141.65. If we do see a bounce, reassessment will be needed from that level. Super Thursday is back and all eyes are on the Bank of England's rate decision. The Bank of England is widely expected to keep rates on hold at 5%. And therefore could give a little bit of a bumpy ride for the pound, even though it did bounce off that key level around the 129.70.80, and now from the close it looks destined to reach its target of 132.25.35 and reassess from there. Right across the board, I do stress that traders should continue to reassess and adjust risk management strategies, as the whipsaw price action and volatility is expected to increase this week given the crucial data, especially with the central banks being the Bank of Japan, the Bank of England, and of course the US Federal Reserve. So it will be a busy week. Spot gold, well, the market breaks further to the upside and explores into uncharted territory as it heads closer to its target of 2,600 after printing a high on Friday of 2,585. Given how strong the technicals are, I still feel there is potential to reach its upside target of 2,600. With any pullback, do keep a note, likely to be around 2,558 to 59. And wrapping up with oil, the market closed out a positive week if we turn to the weekly time frame, and from there rebounds off the 3-year low, as concerns over Hurricane Francine's impact on the Gulf of Mexico production and refining helped crude find its momentum. With the hurricane being downgraded to a tropical storm, the market is likely to show a little bit of mixed price action where it currently sits, but nevertheless I feel there is further gains coming that could look on towards 69.50 and reassess from there. Any weakness support seen around 67.1895 to the start of the week. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest report, and I hope you enjoy the great start to the new week.